Good afternoon, everybody, and welcome to the Fintech Summit at GSMA's APAC conference. My name is Brian from the GSMA. A big thank you all for joining us today, and indeed a big thank you to our sponsors, GCash, for their support in helping create the event today. I'm absolutely thrilled to share our lineup of speakers for today. These are people who I know because I've worked with already, or people I've really wanted to work with for quite some time. So I'm quite excited myself, so forgive me for that. If I could just briefly, the way we're going to work today is Martha and then Sandeep will do presentations, and then they'll join me for a short panel. And then we'll do a series of other presentations by Jeff, Zhang, by Wee, and also John. For a panel towards the end as well. So presentations panel will be the flow of today. There's an awful lot to get through today, some fantastic presentations. So I'm really keen to introduce our first speaker. Martha, welcome to the stage.
Good afternoon. So it's more exciting to be talking face-to-face rather than on Zoom. So excited to be here to share GCash, the GCash story, and our journey so far. Okay, so let me kick things off. So first, a story. Let me tell you a story of what happened sometime summer last year. So a girl posted on social media her story about meeting a fisherman while on the beach. So she was strolling around the beach, and a fisherman asked her if she wanted to buy his day's catch. And she said, I'm on the beach. I didn't bring my cash. I don't have my wallet with me. But good thing, though, the fisherman said, I accept GCash. I actually have GCash. And so the woman was able to buy lobster, fish, and I guess more than half of his day's catch. That's very exciting, and that's very meaningful in a country like the Philippines. Imagine a country composed of 7,100 islands. So you can imagine how many fisher folks we have, right? And down in those islands, they themselves now use cashless means. Okay? So this is particularly important. So you'll say, okay, but in the developed countries, there are a lot of cashless means already. I mean, it's been there for more than a decade. What makes you special? Okay, so first of all, what is GCash? GCash is an app. It's an e-wallet app that turns your phone into a virtual wallet. It helps you store money in it and allows you to pay, allows you to do some financial services and other lifestyle services. But why is it particularly meaningful in the Philippines? Because Philippines is largely an unbanked country, meaning more than 65% of the population don't have bank accounts. A greater majority of what's remaining are underbanked, meaning they may have bank accounts, but they rarely use their banks. Probably they just use it for the payroll, or they never visit their branches, and they really are not very familiar with various financial services tools. Penetration rate in the Philippines for credit cards only 2%. So I understand in developed countries you have a lot of people who are already banked, and therefore it's easy to journey them into being cashless, whether through cards or by just linking their banks into their wallets, right? But in the Philippines, imagine no bank accounts, no documents also. And by the way, we still don't have a fully rolled out national ID system. So people who are lacking in documents, how do you journey them into financial literacy, financial management, and financial savviness? And it's very important. What is convenient in other countries means actually something more necessary or important in the Philippines, because it means livelihood. It means progress for these people, to include them and to have them be more financially literate. Yeah. So the people that we are including are the mass. And we are talking about riders, tricycle drivers, sari stores, and even market stall vendors. And this is very important because these are the very people who comprise a lot of our MSME industry. Okay, next slide. So to describe to you our journey so far, GCash has been in existence for 15 years now, or more than 15 years. So it was invented back in 2004, 2005. Back then it was a USSD. And all it did was like to store money and to try to transfer it. But while we grew exponentially during the pandemic, it's been more than a decade of preparation. Before the pandemic, we've laid the foundation. By 2012, it shifted into being an app. We launched the app for GCash, and then we partnered actually with Ant Financial to improve further the app. And by 2020, we've already had all these services inside the app, and we've migrated to a more stable platform. And during the pandemic, we actually became the government's tool of choice for distributing financial aid. We were able to distribute more than 16 billion funds to more than 2 million Filipinos in terms of financial aid. We've also helped in the empowering entrepreneurs in a world where there seems to be nothing that's working. They found something that worked in GCash. Okay. So while I said before that GCash is an e-wallet, it has already evolved into something even more than that. And people have now referred to GCash as their personal everyday life hack. So what do I mean by personal everyday life hack? So personal because it allows for creative ways of using different features. It's everyday because it addresses everyday needs. And life hack because it opens up new opportunities. So while we offer payments, transfers, financial services, people actually use it as a source of livelihood, whether for them becoming the community's payer of their bills, or someone who buys load for the family, or who transfers money from the city to the provinces for those who are trying to support their parents who are working in the city and supporting their parents in the provinces, or parents who are supporting their kids who are studying in the city. So we've also allowed for that. We've also managed to, and this is not us actually, this is the consumers trying to evolve the usage of GCash. During the pandemic, they've used our app as a virtual greeting card. So it has now like substituted the usual Hallmark greeting card. They'd use it to greet people, happy birthday, anniversary, even during Valentine's Day, they'd give 143 pesos to their loved ones to signify 143, or if they didn't have money, 1 peso and 43 cents. And if they were richer, they'd give 1,430 pesos. So that's how they've evolved the usage of GCash. But more than that, these are, I guess, the more important use cases that GCash has been known for, and why it heightened the relevance of GCash among the people. First, it was an essential during the lockdown. At a time when people couldn't go out of their homes, or for merchants who had to close their shops, it allowed them to accept payments and to pay their vendors as well. So it allowed them to operate. For people who needed essentials, food, medicine, it allowed them to pay, right? GCash was a consistent chart topper in terms of downloads, and even now, in terms of active user base. Second, we've become, as I said earlier, the government's preferred financial aid tool. We were able to distribute more than 16 billion to more than 2 million families, Filipinos. Also, we've become like a digital bayanihan tool. Bayanihan, what I mean by that is people helping each other. So for digital donations, even the most popular celebrities would promote GCash for free because they wanted to help others. And they knew that with GCash, it's a reliable tool and they can actually bring the money where they wanted to. We've also helped transform traditions. So Christmas is a very popular occasion in the Philippines. We're known to celebrate Christmas for 3 months, sometimes even extending to 6 months. So imagine what happened during the lockdown when people weren't able to go out, right? So the reunions became virtual. And one popular thing during Christmas is what we call aguinaldo, or gift giving. So how can you give gifts when you can't be face-to-face, right? So what happened was they gave money gifts. So in Chinese, you call it ang pao. In Filipino, you call it aguinaldo. So we were able to continue that tradition, and actually a different tradition was able to evolve. And you see people texting on Twitter, on Facebook, on Instagram, their numbers, and say, Merry Christmas, this is my GCash number. Okay. Also, it introduced, actually surprisingly, a lot of young people to financial services. And that's what we found out. It's the young who are quite savvy now. Whether they're from the province or they're from the city, they're now users of savings, they're now users of investment tools, and even lending tools. We've also empowered more than 5.2 million merchants and entrepreneurs inside our platform, and I'll talk more about that later. And lastly, we don't just serve the Filipinos in the Philippines. We're now servicing even the OFWs, or the Filipinos, everywhere they are. What makes GCash effective as a tool is because of the platform and the use cases that we have inside the app. So we allow for inflows, which is we have the cash in, we accept payment, payroll, we have that capability. And we are also an everyday payment and transfer tools. We have link-ups with banks. We have more than 1,000 billers inside our app. We allow for sending money and bank transfers. We also have digital lifestyle services like PayQR, shopping online, booking movies, vouchers, and what we call G-Life, or internationally, it's more popularly known as mini program. So the big Chinese apps like Alipay or WeChat, they use this. So in the Philippines, we have that, and we call it G-Life. So anything you want, gaming, food, transport, you can get it inside GCash, in G-Life. And lastly, of course, financial services. We'll show you the stats later on how we were able to help the society uplift the financial services sector. Okay. So these are our high-level stats. We are now the #1 mobile wallet, actually financial app in the Philippines. We've become embedded in Filipinos' daily lives. And we have more than 66 million registered users. This is the most updated numbers, and for the first time publicly, we're announcing it. More than 5 million merchants and social sellers. Our daily logins even peaked at 29 million. So imagine 29 million logging in daily inside our app, and 19 million daily peak transactions. We're the first and only duacorn in the Philippines. So all this happened because of the innovations that we've done in the app and within our organization. But we don't just innovate for innovation's sake. Our innovation is guided by our purpose, which is making Filipinos' everyday lives better. So every innovation that we think of course, we use the customer as our North Star. We try to understand them, listen to them, and be there for them, and come up with improvements, however small or big it is, as long as it helps in their everyday lives. And that's what we call innovation for good. So some examples of the game-changing innovations that improve our core services. We have pay bills. And with that, we've we've introduced insurance so that every time they pay their bills, they get to insure themselves in case something happens to them. Their bills get paid for 36 months. On buy load, so just a background, Philippines is more than 95% prepaid. So buying load is very important and prevalent. So in buy load, we don't just give them rebates. We know that a lot of Filipinos are very excited about gaming. So we've gamified it into a load to win, a lotto type of winning. And on paying QR or scan to pay, what we've done is we introduced G-Gives. So G-Gives is, it's actually a colloquial term, gives. We call installment in the Philippines gives. So 12 gives, 24 gives, right? So that's our buy now, pay later. So we've incorporated it inside the app. And so that whenever you try to use GCash as a form of payment, you can pay via cash or pay via credit or pay via installment. I've seen QR codes around, but I've also seen that like credit is separate from cash. Inside our app, you have a choice. Everything is in there. Okay. And this is what I was talking about, financial services. So we have savings, GSave, we have GInvest, we have GInsure. On GSave, 1 in 5 banked Filipinos now own a GSave account. So we're not a bank, we're not a digital bank, we're an e-wallet. But what's good with that is we're able to partner with any bank or any financial institution because that's a conscious choice that we've made because we know that financial inclusion is a complex, difficult journey. So we choose to collaborate rather than compete. So we have several banks inside our app. We have one of the biggest banks in BPI. We have also a digital bank from Malaysia called CIMB. We have Union Bank as well inside our app. So we offer various savings accounts. Even the new digital banks are partnering with us to offer also that. So in the past 2-3 years, we've helped the number of depositors grow significantly, and that's through our GSave service. We also offer GInvest, which in a short time, I think in less than 2 years or less than 1.5 years, we now occupy 4 out of 5 UITF accounts is from GCash. And 1 out of 5 mutual fund owners is via GCash. So we also partnered with Atram, with BPI, to offer these types of tools. And we plan to further expand on it. So right now, we're only offering funds, but within that space, we are a dominant leader already. On GInsure, we also work with Singlife, we work with PruLife, with Etika, with Igloo, and others more, to offer different insurance services. Like we now have more than 20 products inside our app, and we work with more than 10 partners, insurance partners, to offer InsurTech. And we contribute 1/3 of new life non-VUL policies in the Philippines. Okay? And on lending, this is very important for GCash and for financial inclusion because it's providing cash to people who are really in need. And it solves the lack of easy access to credit. So we have 3 products for now. We have GCredit, GLoan, and GGives. So GCredit is tied up with CIMB. We've disbursed over 34 billion pesos to those in need. On GLoan, we are fighting the loan sharks. So people who are normally in need are the desperate ones, and therefore they just hang on to whatever's offered to them. What we're able to do is imagine offering almost bank rates to people who don't have documents. And in the case of GCash, you don't have to submit any documents. This is powered by GScore, or our own credit score, which is one of the most sophisticated, most complex credit scoring in the Philippines. I think it's also, I dare say, it's also one of the most reliable. Our Gini is world-class. Our Gini index is world-class. And GGives is our BNPL offering. and we aim to expand the credit to more than 2% of the Philippine population. And our lendable base, we keep on increasing it. And so far, our NPL is very, very good. Yeah. So hopefully, with all of these efforts, we are moving closer to our vision of finance for all. That's me at the bottom right. I experienced the same thing in a different region. So I think the girl that posted in social media was in the south, in Visayas. I was in Batangas. I experienced the same thing. And I was also just told by my colleague earlier, even when you go to Palawan, one of the best beaches in the world, you have to visit that. Go there when you visit the Philippines. The people who sell coconut in boats, they also use GCash. So we also empower drivers, wet market stall vendors, and even the sari-sari stores. These are millions of stores, small stores situated in neighborhoods, in commercial centers. And these are what actually comprise the entrepreneurs in the Philippines. This is what business is in the Philippines. So that ends my presentation, and thank you.
Martha, thanks very much. A brilliant story of innovation, full of new ideas, which we'll explore in our panel shortly. I'd like to introduce now Sandeep Patel from Citi, again, to share another brilliant paper on innovation. Sandeep?
Thank you. And good afternoon, everyone. What a brilliant story, Martha, Brilliant story of social inclusion. And that's something every government, every country, every society is trying. So I'm really happy to see those numbers and the impact you're making on Philippine society, and I'm sure outside as well as time goes. Thank you for that. As Brian mentioned, I work for Citibank. I've been there for almost 25, 26 years now, part of different businesses from treasury to cash management to corporate banking. Last 5 years I spent in financial institution space. My clients are all the banks, insurance companies, broker-dealers, etc., fintechs. And I have learned a lot in that journey in terms of how the Web3 is evolving, how the new digital technologies are disrupting the business models. And this is my effort to really share some of those views that I've gathered with my learning with my customers. These are all my personal views, not Citibank views per se. But the topic is something that you'll hopefully, associate very closely with. It's Metaverse. Very different interpretations of Metaverse is, if you have young kids, if you have teenagers, you'll clearly see them wearing all those headsets, playing games, all the 3D games and cool games. And many people associate Metaverse with that AR or VR experience. I think that's the starting point. But Metaverse has evolved into a much different space, much different business potential it offers. And today we are going to make a little bit of an attempt as to what exactly does it mean. But just before I go ahead, just to give you a couple of examples, you would have probably heard, but the Metaverse concept got launched a couple of years back. A lot of avatars being created. Started with gaming, because gaming is the right use case for Metaverse, but went very quickly into the consumer space. So Ariana Grande hosted her musical concert and 78 million people attended. Or Adidas hosted their NFT, the shoe NFT, right? You can buy a shoe, you can hold that NFT, you can manufacture when you want, gift if you like. They sold 23,000 pairs for cool $750 million a pair on an average. $750 is not something I'll pay to an Adidas shoe otherwise, but people did pay for NFT. The same experience of some fashion brands, retailing, you have so many use cases where people participated very enthusiastically and trying to get that experience, and it's evolving. Now, when we are talking Metaverse, we have to visualize a much different future way beyond the gaming on the consumer space, right? So the gaming and consumer space is very easy to imagine, but the use cases in Metaverse are now rapidly rising to business world, to corporate world, to our day-to-day lives. Martha explained beautifully in terms of what kind of experiments she created and where it has taken the economy, how the inclusion has happened. And probably similar opportunities do exist in Metaverse as well as we go. It's just a different technology. It's a different experience. It's nothing but an emergence of a completely virtual experience, or I would say a cocktail of physical world and virtual world. And the possibilities are immense. And we'll look at some of those possibilities. But there's a lot of corporate focus coming in now. whether it's big chips, chip manufacturers, clouds, fashion brand, real estate industry. Potentially big investment industry emerging there. So the digital assets, now crypto of course has become a little bit of negative news. See, last year it was everybody's running after crypto because it was fear of missing out. And now it has become a fear of holding out basically. So people are trying to get out of it. There is disruption. Any new technology disruption is guaranteed. It's not a regulated space by the way. So there are accidents and there will be accidents. But not just crypto, but the NFT space, the CBDC, the central bank digital currency, and the digital assets are coming across the board. You'll be buying mutual funds, you'll be buying saving, investment products into the digital world. And that space is very promising. And finally, the technology space, the open metaverse. Whatever we learned, now we need to replicate in the metaverse, and that's promising again. Now, what are the use cases that we are talking about here? In the corporate space, supply chain is revolving rapidly. Governments are trying. The energy sector is new. The insurance sector is trying completely different experience in terms of selling a policy, visualizing the benefits of policy, or visualizing the benefit of healthcare that they get, or visualizing the complete 3D world. I'm traveling to US, I have healthcare insurance, where can I go? I'm visiting Dallas, where can I go? All sorts of use cases are coming. Healthcare, medical healthcare, for example, remote consulting, counseling is coming very rapidly. Real estate, the complete cities are being immersed into the region. So Seoul as a city became the first digital city completely on metaverse. So if you wear your headset and go into the metaverse and visit Seoul, you'll practically have the same experience as if you're walking in the lanes of Seoul. You'll have the same McDonald's shop or a coffee shop that you like or whatever it is. And they replicated that experience and real estate industry took off after that. So every real estate project that's being launched, you can go visualize an apartment you want to buy, visualize the shop that you want to buy. You could be sitting anywhere in US or in Hong Kong or in Singapore for that matter. And people are transacting. So a lot of use cases coming up which are taking this industry and promising future way beyond gaming or way beyond retailing. And that's the promising space we need to understand. What is metaverse? It's the space, which is this virtual space, three-dimensional space. It's the interface using the AR headset, VR headset, or any other augmented tool. Then it's the monetary infrastructure that sits behind it so that you can transact very easily. And then it's the computational power. Because the experience that a human being wants is a near real experience. You don't want a cartoon-like experience of yourself wandering into that space or the experience is slow. So that's, if you combine all these 4 layers, that creates metaverse. And the 4 layer and the experience there, the speed there is going to define how successful and how fast the metaverse progresses. Now, the metaverse economy has promising future. Now, these are a lot of research estimates we collated in Citi, right from BA to Oxford Economics to GSMA to IMF to some of our banking partners as an example. Slightly complex graph and numbers, but 2 simple takeaways, I would say. If the technology evolution is faster, i.e., I don't have to buy a separate headset, I can use my phone. I don't have to buy a very heavy headset. I have something which is light to use, lasts longer, etc., etc. So if the hardware industry evolves faster, we could have as high as 5 billion users plugged into metaverse. If that doesn't happen, we'll probably have 1 billion users, and this is by 2025, not very far, right? So we'll have billions of users for sure. They will be transacting in metaverse. So all the e-commerce experiences we have today will probably graduate to metaverse. No matter you're buying something, gifting something, or social interaction for that matter. And the GDP creation that it promises is almost 1/3 of the digital GDP is going to come from metaverse. And just to equate the statistics, 1/3 of our GDP is going to get into the digital economy. So you do a 1/3 of a 1/3 maths, that's roughly 9 to 10% of the world GDP by 2030 will come through metaverse. And these are new services that will be created to service the demand that we are going to see in future. So it's a net new GDP creation. But over and above that, there is a lot of GDP that will migrate, services that will migrate into the metaverse. And that's the migration as well. So it's a tremendous potential. And hence it pays to see how the future looks like in metaverse, how the disruption will happen for my industry, for my organization, for my business model, and then start visualizing what are the possibilities for future. But the economics is compelling. Clearly, it's a forward-looking economics. And there are a lot of assumptions one has to make in arriving at that. But it's, again, a consensus across so many research firms. Now, moving from numbers, as I was saying, initially, the industry started with consumer mania. The gaming industry is an example, or some of the consumer applications that I mentioned. Now, we are seeing a lot of corporate interest emerging. The red line that you see there is just the corporate filings that we have taken with SEC. where either the strategy paper of that organization or the initiative from the strategy group or the CEO or the board of director is mentioning meta. The metaverse is a space and the company's strategy in that space. And almost 1/3 of the world is really interested in exploring or experimenting that particular one. So which is significant amount of interest, and we see that going up only. No matter the market goes up, goes down, there are shocks in the market, etc. There is going to be consistent flow of capital to this industry and making that experience as real life as we can. Now, what does it take to deliver metaverse? There are 5 pillars. Again, they are not in any order from that perspective, but one is the computational power. So for you to get a real life experience, the computational power of the device you are holding in your hand has to be super normal. That's where I think the chip industry will benefit from. Second is storage, because the amount of data we will create will be multiple times of what we are creating today. These are all going to be 3D interactions. I go for a date with somebody, I will record that experience and conserve it for life. Then imagine what I'm going to store and how I'm going to play with that data. But along with that will come a lot of challenges in terms of handling data, managing data, data security, data standards, data protection. But the industry is going to just multiply in terms of storage, computing, etc. Network infrastructure, and many of you come from the MNO industry. The bandwidth that we have today, the latency that we experience today is not going to quote unquote facilitate a meta experience. And that's where the industry has to evolve to a completely new generation of speed, giving completely different experience and very low latency to the user. Fourth pillar is all the hardware industry. What kind of AR headset, VR headset, the hardware in terms of the device in hand, etc. How do we evolve that? How light that can be? What could be the battery power? What experience does it impart, etc. And fifth is the platform, because if every country tries to evolve their own platform, their own standards, and if they are not interoperable, we are going to repeat the mistake that we had in 2.0. And it's not going to be that in the journey. But we have had so many governments, so many bodies now coming up and trying to visualize what that standard should be, how that can be made interoperable, and how we can really not repeat the mistakes, but learn from them and make this experience much more faster. But those are the 5 pillars that will define how rapidly this space evolves. These are still early days, but pretty promising, I would say. Now, digital assets, the financial layer becomes an extremely important catalyst in any economic conversion. Martha spoke about GCash and the experiences she had, and that clearly cultivates, whether it's a manufacturing GDP or the fisherman's or the services GDP, whether it's borrowing, lending, loans, etc. Right? It is created because of the wallets that she created, and it's the same experience the industry is going to have if the digital asset industry is the proliferate. And that's why it's very important to understand the digital asset, which is going to be a big catalyst in creating that metaverse and creating the potential and realizing that. Now, there are a lot of emerging use cases in terms of digital assets, whether it's real estate, asset-backed, commodities, etc. And just to give you an example, today you buy an apartment in Singapore, costs $1 million, for example, correct? And it is in your name, right? Tomorrow's use case, that apartment could be held by 1 million different peoples. You'll have 1 million different NFTs being created, and they will be held with very different set of people. They may not be sitting in Singapore at all. They may not know how the apartment looks like, but they just want to be a part of Singapore real estate industry. And by virtue of that, you created a completely different asset class in the real estate world. But whenever they are making good investment, big investment, they would like to visualize what it looks like. And that's where metaverse bring the demand and supply together. I would like to be owning some real estate in, I don't know, Tokyo, New York, Argentina, wherever, right? But I don't have possibilities today. I don't have that practical. Tomorrow's world, so long as the blockchain technology works, smart contracting works, so long as the legal infrastructure, regulatory infrastructure allows, all this kind of experimentation will be possible. And that's where the industry is going, and that's the kind of role digital assets will play. The banking and payment and settlement is just one small part of it, but it's going to be far bigger than that in terms of us holding our savings, our investments, our retirement fund into this kind of assets. If we don't hold it, our children will certainly hold it. Money in the metaverse. There are a lot of forms of money that already exist in the metaverse. There are in-game tokens, there are cryptocurrencies, which I'm sure everybody is aware of. They are going through a little bit of bad press right now. Stable coins, which are nothing but replicating the fiat currencies, 1:1 into the digital world. The CBDCs, where the central banks step up and create a digital currency, and the fiat money as well. You don't have to necessarily have a digital currency. You could be transacting using US dollar or Sing dollar into the metaverse. And those are all realities. You see a lot of brands and use cases mentioned there. It's already happening. And we are still yet to see even the early days of metaverse. So as this industry goes ahead, we see rapid disintermediation of financial services, and many different players come to the table, not just the bank, not just the telcos. And then last but not least, what is the impact of digital assets on mobile ecosystem? A lot of impact. A lot of takeaways in terms of the new services and the opportunity space it promises. The market will increasingly require agility, payment optionality, transparency, speed, ubiquity, digital identity. They'll require solutions that are interoperable. They'll require solutions which are concurrently existing in different planets without cutoffs. So people want borderless world. People want frictionless world. That's what the metaverse promises, and that is the opportunity for us, no matter which industry pillar we sit in, to create that experience. And if that's going to be the future model, business model of tomorrow, we have to visualize what does it mean for us, our industry, our company, and what strategic bets we need to start taking there. So again, just to summarize, rapidly evolving space, early days, but extremely promising, and something we must pay attention to as to how it evolves. Thank you.
Sandeep, thanks very much. And we're now going to just explore their papers in a little bit more detail with Martha and Sandeep, if I may. Thank you.
I'm okay here.
Yeah. Okay. Sandeep, you okay?
Thank you.
Yeah. Martha, so in your paper, the theme of, well, in both your papers really, but in yours, the theme of innovation came out, and you talked about putting the customer at the center of innovation. So I'm really interested in product development process. So on a daily basis, how do you make that happen? How do you put the customer at the center?
So first of all, we're very much data driven. So we look at our data and from the individual departments and even up to my level. So we have a weekly cadence that we call market attack. Market attack.
Okay.
Attack.
So that's where we see various dashboards and analytics. We do deep dives, cohort analysis, and whether it's data from inside or market research data, we do that, and we keep on asking like why. So it's not just like just showing the dashboards. We focus on the discussions, so we value discussions and exchange of thoughts. And what's good with our platform is it's easy to do something.
Okay.
If we think of one thing, okay, can we do this? And we're very agile in our approach.
Right.
So we actually have pods in the different parts of the business, so that if there's an idea that's promising, we can do experiments, quickly develop, and we always go for MVP or minimum viable product.
Yeah.
So from the data, we try to ideate, we narrow down the ideas on what could be developed, and then we just develop what's easily doable. Of course, we try to tier them. We have medium term, long term. But those easy ones can be experimented. It's as simple as, why don't we, if people are using our send money with a clip like a greeting card, so let's follow them. From birthdays to anniversary, even during COVID, cards of condolences, donation cards, even baptismal cards. So we just like made artworks. But surrounding those things, more than just a simple introduction of product, we also focused on education. In the tech world, I think a lot of people are guilty about this. When you're in tech, you'd think that you understand it, but you cannot overestimate the ability of the mass or the ordinary citizen to understand what you're saying. So we have a principle of, okay, we need to communicate this in 3 easy steps. It has to be explainable in 3 easy steps. 1, 2, 3.
Right. And you set yourself that challenge with new propositions to be able to articulate that to
yes,
customers.
then post that, we also keep on monitoring, and then we again discuss it in market attack. How is it doing? What's doing well? What's not doing well? How do we improve it? Those things.
That's super, thank you. That's a really great explanation of a new product development process. Thank you. Sandeep, if we can just continue that theme of innovation. So, as one of the largest banks in the world, when we look at Metaverse and corporate activity, what are we seeing by way of funding rounds or acquisitions? What can Citi see?
So I think, the way the corporate activity is evolving, it's still experimental, I would say. There are 4 phases in my eyes, at least. One is when the corporates are really trying internal meetings, employee engagement, trainings, etc. And these are very easy use cases to imagine in the metaverse. From there, the journey goes on to getting your clients hooked onto metaverse, especially the consumer-facing industry. And they are creating their brands, they are creating stickiness, they are creating experiences in that journey, and many corporates have already invested in that space. Third is really getting your suppliers hooked onto metaverse, you visualizing supply chains, etc., and then trying to invest into how do you really visualize a product, how do you really negotiate a contract, and you do a smart contracting, etc., etc. And fourth is the manufacturing and shop floor activity, and that journey is also growing very rapidly. Now, depending on which phase of metaverse the adoption the corporate is going, the amount of capital will emerge. And depending on the capital emergence needs, corporates will go to market. So again, are we seeing a lot of capital raising in the metaverse? Probably not. But are we seeing a lot of use cases? Absolutely yes, rapidly evolving. I mean, just to give you 1 or 2 examples, I was NVIDIA, they created an openverse. Basically, anybody can join, create your space, you can set up your shop, you can set up your company, do whatever you want, right? And here is so BMW went there and set up their entire factory. They replicated their entire factory into the openverse with an idea that they can do any simulation that is very difficult to do on a factory floor otherwise, whether it's work shifts, orders, productivity trades, etc., etc. Similarly, we have Lockheed Martin. They created entire California grape fields and all the fires that they're having, and then simulating as to how do you really play with the forces to manage those. So, experiments like this are going to, quote unquote, create credence, create momentum in the corporate space. And as we see more and more momentum, I'm sure capital raising and everything will follow, but we are not there yet.
It's still early days.
Absolutely.
Okay. Martha, obviously, again, just continuous theme of innovation. Sandeep's paper was full of lots of things at the very, very early stage of their product life cycle, right at the start, really. So for you, how do you even start to explore some of those things? Because consumers, metaverse is just a word, and some of these things are so new. How do you even start to consider what they might mean?
So there are 2 sources of innovation. It's consumer insights, or sometimes technology that's available, or emerging technology, and that's where like the metaverse, Web 3.0 comes in. So we are also, in the same way that we're very much grounded, we're also keeping our eyes and ears open for these Web3, DeFi types of MLAI innovations, and we are actually exploring those things. But what we try to do is to first understand what the technology is and see how it's progressing, and then we try to so blockchain, so get a bit of participation in it, how we can apply it internally. Right, and at the same time, example on crypto, so we're releasing a G crypto inside our app as well.
Okay.
So if you look at our app now, it says coming soon. So probably out there either this month or next month.
Okay.
Right. So we're also doing that. So, but at the same time, educating consumers that hey, this may not be for everyone.
Yeah.
Some caution. Just to make sure that when people enter the app, because our trust score is so high, we make sure that it's eyes wide open, you are responsible for what you're doing, and this can go up, down, and like a lot of education. So we marry those things, so we learn with our consumers, but I think the important thing is being transparent.
Right.
Because you cannot get any product or any innovation perfect. But what's important is you keep your transparency to the customers, so they know that this is what they would expect.
Was that difficult then to make the decision to explore crypto because of where your brand is anchored? Because people trust you so highly. Was that difficult to go and explore such a new area?
Not necessarily so, because one of the key things that we're looking for and what we found out, our tool is being used as a livelihood tool. People who need to earn some form of living, or want to get a different shot at their future. So we service the mass. So we have 66 million users. That means like a big part of the base of the pyramid is also inside our app. So it's a matter of educating them, making different tools available to them, whether it's risky or we just say this is high risk, this is medium risk.
Right.
right? And we say it in very laymanized terms,
Right.
so that we educate them and we give them the choice. Example, we made available recently funds inside our app. So in the Philippines, it's hard to get global funds. So unless you have like millions of pesos or you have a private banking account. In our case, we made it available for as low as $1 or $20.
Right.
But we said, instead of buying a Starbucks or an ice cream, you can use it to buy, and you can be a part owner of Google, Apple, like that. But we say also, this can go up and down, and we have graphs, simple graphs that people understand. So that's how we manage the risk part.
Yeah.
It's being transparent and
Right.
always educating.
Yeah, thank you. That's really clear. Thank you. Sandeep, a lot of the focus obviously is on B2C, but from a B2B perspective, in the core Citi business of payments, what are the developments on B2B using blockchain technologies? What can we see?
So I think, the B2B services, I mean, B2C everybody understand, and GCash is a great example. They're just translating into Web 3.0. But on a B2B side, I would say there are 3-4 use cases which are rapidly evolved or evolving. One is clearly e-commerce, and e-commerce has gone a lot more into B2B, which is the same GDP that's, quote unquote, translating into Meta or Web 3.0 as well. But it does require B2B payment service in the end, just to make sure that the buyer and seller get what they want out of each other. And that trend is evolving very rapidly in terms of digital payment. The second one, the financial markets are evolving, I would say, much more into the digital asset landscape. Because more and more players are buying digital assets, whether it's a crypto or digital bonds or any and every store of value kind of digital asset. And then you need the banking infrastructure to do risk mitigation or settlements, whether you're doing repo, whether you're doing lending, borrowing, etc. And there are digital payments evolving into that landscape. Third is the risk mitigation products, like in a traditional sense, you'll open an escrow account, you'll give a guarantee, you'll open a letter of credit. And that all is in the Web 3.0 promises to be an atomic settlement, a smart contract. Many people can come together, liaise with each other, define their own terms and conditions. The smart contracting will maintain that. So just to give you a real life example, we are working with a Panama Canal where the canal operator has to have certain amount of money. Shipping company has taken it. The payer, the buyer, the seller, both are, and all of these parties, otherwise in physical world, have to open escrow or have to issue guarantees to each other. We brought them onto a Web 3.0, onto a blockchain. Everybody is a counterparty. Everybody is a node to that transaction. And then now you can execute any guarantee, shipping guarantee, payment guarantee, or transportation or payment to the government or taxes, etc. into that ecosystem. But just by a press of a button, everybody is getting what they want, and you settle the payment beautifully without exchanging any paper, without signing any contracts. So that to me is a great example of what are the possibilities into B2B payment landscape.
Yeah.
But just to summarize, across markets, foreign exchanges, repos, money markets, etc., there are use cases of B2B payment evolving rapidly and something that's going to disrupt the industry.
What a fantastic solution. Martha, just continuing the theme of B2B, what's the merchant proposition from GCash?
The way we make ourselves different from others is that whatever type of a merchant you are, you have a place in GCash. Whether you're a social seller, an informal merchant, a micro merchant, we have services for you, and then we help you journey. We're there for you as you grow, right? So, or you're a small type of business. So if you're a micro merchant, normally you need send money, receive payment, pay QR or scan to pay, or you need also your own access to financial services. You need savings so that you don't have to go to the bank and withdraw money. So all those things are inside you.
Yeah.
So you act like a consumer, actually, if you're a micro merchant. But when you start to evolve into being a small business, you have more transactions, right? And you need security in certain, you need insurance, you need security. So we have what we call GCash Pro. So we have GCash, we have GCash Pro, and then we even offer like the mom and pop stores a digital version, which is what we call GCash Po. So GCash Pera Outlet or Money Outlet. And that po is actually a term of respect in the Philippines. So we have those services. We also have for enterprise. For enterprise, we have GCash Connect, or a login service, identity EKYC service. We even have commercially available credit scoring. We also have payroll disbursement. We even have ad tech. So you can advertise inside our app and advertise to 66 million. We also help you, if whatever type of business you are, if you want a digital storefront inside our app, you can do it in less than 3 months. And we have the connections for you, whether it's an independent software vendor, access to that, so you can do it inside our app. And once you are inside our app, you have access to 66 million users. We help you advertise it. You also have access to vouchers. We have digital vouchers for you. So those things. So from a physical world, you can transform your business into virtual.
Yeah. Brilliant, thank you. What a really compelling proposition. So I'm conscious of time, so our answers will need to be brief on the last one. So for Martha, what would make a good year if we were sat in a year's time, reflecting on this last 12 months? What one thing would you make you think, oh, that was a really good year?
It's increasing the penetration of financial services in the Philippines. That's what we are here for, financial inclusion. And therefore, if you get to increase the penetration of insurance, lending, investment and savings, and that would be a really good year for us.
Thank you. Super. And Sandeep, for you in Citi?
So I think from our perspective, again, I'm restricting not wide Citibank, but just into the space of Web 3.0, our ability to service our customers wherever they need in this Web 3.0 world. And if we can have more and more use case like the Panama Canal I mentioned, that's going to be a successful year. Now, whether we are going to have 10 use cases, 20 use cases, 50 use cases, we don't know that. But our effort is to really service each and every segment in each and every geography for every use case that our clients want to try. So maximize that number, and that's success for us.
Fantastic. We will need to end there because you can see the clock. We're nearly on time. Thank you both. Really insightful answers, and that was really insightful. Thank you very much for your time. Thanks, Martha. Thanks, Sandeep. Thank you.
Thank you.
Thank you. Yeah. So we need to continue the pace, as you can see. And so now we're going to be joined on stage by Jeff DeLong from WorldPay to share insights, really fascinating insights on payment trends in Asia Pacific region. Jeff.
Thank you, Brian. Good. Well, thank you, Brian, and good afternoon, everybody. My name is Jeff DeLong. I'm the Director of Vertical Growth at FIS, and I focus on the government, utilities, and telco verticals. It's an honor to be here with you today to share some insights on digital payments and how they're powering the economic growth in Asia and the Pacific. So with that as the backdrop, I'll start with an overview of some global payment trends that we've observed. Oops, actually skipped over a slide. I think I might be missing a slide, but before I get into the payment trends, I'll actually take a second to let you know a little bit more about who I am, who our company is, and what we do. So our company, WorldPay, is part of a larger company, FIS. FIS is a global financial technology company that provides solutions for merchants, banks, and capital market firms worldwide. In short, we're a one-stop shop in the payment and fintech landscape, and we manage the movement of over half the world's wealth. So when you buy a cup of coffee, check your account balance, or reallocate your retirement portfolio, there's a good chance that you're using our services. The WorldPay segment is our merchant solutions segment, and we provide global acquiring and gateway services, as well as some value-added services to SMB businesses and enterprise businesses across the globe. And what that means in short is that we provide the pipelines for payment processing, for payments to be made and payments to be received by consumers and businesses in every country. I have a couple stats that I was going to share, but I won't share them off the top of my head. In summary, just know that WorldPay is the #1 global acquirer, and we have a large global footprint in this space. Now, with that as the backdrop, I'll start today with an overview of some global payment trends that we've observed. So beginning with the point of sale, and when I say point of sale, I mean in-person payments, we've seen a strong recovery from COVID lockdowns. After an expected contraction in 2020 of 5%, the global point of sale transaction value has really rebounded strongly in 2021 with a 13% expansion. In fact, the 2021 growth surpassed that of the 2019 pre-pandemic levels faster than expected, as consumers were eager to spend once COVID lockdowns were lifted. Point of sale growth was universal, but the strongest growth in 2021 was seen in the APAC region at 15% year over year. And point of sale is expected to grow at 6% annual rate until 2025, when the global market value is projected to reach nearly $60 trillion. So while that's the situation for in-person transactions, what about online? Well, on the heels of the pandemic, e-commerce is booming. The shift to online shopping continued in 2021 and led to a 13% expansion of the global e-com market. Much faster even than in 2020, when the market expanded by 9%. All regions saw double-digit growth in 2021, but the strongest growth was actually seen in emerging markets, where the Middle East and Africa region, as well as the Latin American region, saw growth of 24% and 21% respectively. APAC growth in e-commerce was not far behind at 17% annually, while the European and North America markets are a bit more established, but still continuing to grow at higher rates than in point of sale. Global e-com transaction value is expected to register 12% growth in the coming years, where it soon will double its pre-pandemic levels in 2019. But what's fueling this growth in both point of sale and e-commerce? In short, the answer is digitization. Mobile wallets are the new leader in payments. In 2021, in fact, for the first time, mobile wallet usage surpassed that of credit cards as the leading payment in point of sale globally, with a 28% share of transaction value. The use of cash dropped sharply in 2020 as expected, driven by the pandemic, and that trend continued in 2021, albeit at lesser rates of decline. I will note, this seems to be a global trend everywhere except for the taxi line at the airport, which is something I experienced last night. Credit card use dropped slightly in 2021 as consumers focus on paying off balances, while debit card usage increased slightly as well. Buy now, pay later companies, or BNPL for short, have started expanding into the point of sale and are beginning to take share from the more traditional bank and retail-led financing models. But globally, the key long-term trend to take away from this is that card use is increasingly shifting to mobile wallets. And when it comes to e-commerce, online increasingly now means mobile. Smartphones continue to be the main channel for online shopping. And in fact, in 2021, mobile commerce exceeded that of desktop commerce for the first time ever, with 52% of all e-commerce transaction value. This is a trend that we expect to continue, and mobile commerce will continue to grow at faster rates than desktop and reach about 60% of all of e-commerce transaction value in the coming years. This has major implications for merchants who must optimize their mobile strategy for the best consumer experiences. But let's go a little deeper into what we're seeing across Asia and the Pacific specifically. As you can see, the use of cash will continue its long-term decline in all APAC markets in the wake of the pandemic. As noted earlier, digital wallet usage has been steadily increasing globally, but this is particularly evident in APAC. Wallets are an outright majority of point-of-sale transaction value in China, and this will soon be the case across the entire region. Cards are expected to remain steady in aggregate, again with a minor decrease in credit card usage and a minor increase in debit card usage, and are still the leading payment in nearly half of APAC markets. And one last thing that's kind of hard to see on this slide, but as I mentioned earlier, Buy Now, Pay Later is making early inroads into the APAC point-of-sale market, and this is following a trend that we've seen grow even more rapidly in some European markets. And on the e-com side, growth in APAC continues to outpace the global market. APAC e-commerce grew strongly in 2021 at 17% across the region and is expected to continue to grow at 12% in the coming years as well. Emerging economies, such as Vietnam and Indonesia, are expected to see the highest rates of growth at 22% each annually, while more mature markets like Japan and New Zealand will grow at 6% and 8% respectively as well. South Korea actually saw the biggest jump in the last year at 26%, with Thailand and Vietnam not far behind at 23% each. All three markets expect to continue on this strong growth trajectory. China grew at a comparatively modest 12% from 2020 to 2021 and projects to maintain a similar level of growth going forward. If there's one thing that's clear about the APAC region, though, it's that digital wallets are fueling economic growth, both at the point of sale and online. So let's dig a little deeper into what's fueling the growth of digital wallets. There are 5 key factors driving the growth of digital wallets. First is the rise of super apps, which combine diverse functionality, including payments, within one convenient app. Super apps are proliferating in every region, but Asia remains the leader in super app innovation. Second, digital wallets offer a superior checkout experience, streamlining the checkout process for consumers. Simplicity and speed are cited by consumers as the 2 main reasons for using digital wallets. The third driver is the fact that many wallets are part of marketplace ecosystems, such as Amazon Pay, Mercado Pago, Alipay, or as I discovered yesterday, Grab. Fourth, a growth in contactless payment terminals has also significantly contributed to the growth of digital wallets, as the adoption of mobile wallets at the point of sale, particularly post-pandemic, has really sparked some growth. And finally, increased flexibility in wallet funding methods is another key driver. But what does this mean exactly, and why is it relevant? A few years ago, most wallets were funded using credit cards. But nowadays, consumers are using a variety of methods, including bank transfer, credit and debit cards, and mobile contracts. Traditional bank accounts remain the most popular funding mechanism, followed by credit and debit cards. But one thing to note, and this is important, in 2021, for the first time, 7% of respondents said they now fund their wallet via mobile carrier billing. And where we see the highest prevalence of that is actually in Asia. Globally, the markets with the highest rates of wallet funding through a mobile contract are China at 20%, Japan at 12%, Sweden with 10%, and the Philippines with 10% as well. 3 of these top 4 markets are obviously in the APAC region. So finally, what does all of this mean for you? Connectivity is at the core of payments. It's the single most important factor fueling the digital transformation in the payment side. The overlap between telco and fintech has never been greater than it is today. And for many people, their phone is now their bank. As we move forward, economies are increasingly becoming borderless. Whether it's the need to send money to family members in other countries or transact internationally, commerce must occur quickly and seamlessly. You need a global partner that helps you accept international alternative payment methods and manage FX pricing. As a merchant, you must have payment flexibility. With so many new payment methods coming online, customers are going to pay how they want. And the companies that get ahead will be the ones that are able to manage and accept multiple payment methods without friction. You need not only traditional credit options, but new and emerging ones, from digital wallets to buy now, pay later, or cryptocurrency and other digital currencies as well. And arguably, the most important factor of all of these is security. The unfortunate reality is that with a rise in digital payments comes a rise in fraud as well. It's imperative to offer the most secure solutions when it comes to payments. You need the ability to identify and prevent fraud before it's too late. WorldPay has award-winning solutions that combine data from over 40 billion transactions annually with machine learning and AI technology to determine if transactions are fraudulent. This cannot be something you take for granted. Oops. So to conclude, I'd just like to emphasize that the payments landscape has never been more dynamic than it is today. In an increasingly connected world, what once seemed unimaginable is now commonplace.
Jeff, many thanks.
Yes.
Many thanks.
Right on time.
It literally said 3 seconds and time up, so brilliant timing. Apologies to Jeff, we lost one of his slides on our journey. They were checked. It's our fault, we lost them, so apologies for that. That slide was going to be about kind of the scale, and you can imagine the scale of payments, transactions that go through someone like WorldPay. It's trillions of dollars, so apologies to him for that, because he was expecting that clearly. Nonetheless, brilliant presentation about trends in Asia. And so on to our next presentation. So anyone who works in fintech knows that risk and security and fraud just come hand in hand with fintech, really. So in this next section, we're going to have two speakers, Zhang Yi from Ant Group and Wei from Touch 'n Go in Malaysia, who's the CRO for Touch 'n Go in Malaysia, will share their insights on how they collaborate to try and help Touch 'n Go manage that risk for their business.
So in this session, I will have a joint presentation with Hui Zi from Touch 'n Go Digital on the topic of how we apply AI and machine learning to build a seamless, secure, and friendly user experience for user onboarding and as well as for user ongoing verification. So before I jump into the technology, please let me introduce Ant Group. So we start from an escrow transaction function for Alibaba e-commerce platform Taobao. And then in 2009, we launched our mobile payment application called Alipay. Over the time, we have added more and more financial service functions into this simple super app. For example, we add the investment function called Yuebo. We also add the credit products like Huabei and Jiebei. And then we actually operate 4 digital banks in the region. There's one in mainland China, Hong Kong, Singapore, as well as Macau. So our mission is to basically enlarge the financial inclusion through technology. It's why technology? It's because technology can enable us to make a difference and foster a level of automation, efficiency, as well as scalability. Another benefit of technology is that we can replicate, because all these functions built through technology, we can easily replicate our products. Hence, besides the financial service offering, We also extract some of the core functions from our super app, those transaction managements, those mini program engine, as well as security and risk components, and package them into a common digital wallet solution and use them to empower our partners in the region. I've listed down a few regional partners we work with. Those companies has been powered by Ant Group's technology. Through these empowerment activities, this wallet companies, we help them to accelerate digital as well as technical transformation. In the past few years, quite a few of them has become unicorn company in the region. And among those capabilities I highlight in the common digital wallet products, I think the most important one is the security and risk components. Not just because I work in this division, also because that this is actually the cornerstone of all the financial service. It pretty much protect business from the evolving risk and fraud. So over the time, we have built quite a few impressive capabilities. For example, KYC. We let AI to examine the pictures of ID and determine whether they're tampering of those information printed on the ID. And also we let AI to check whether there's holograms exist on the documents. In the screening process, AML screening process, we trained the AI to learn from human decisions, the past human decisions, and apply the rules learned to the future transactions to achieve automation. We also have face biometric as well as behavior-based authentication. For ongoing transaction monitoring, we actually build a graph. Let's take the users, merchants, and devices as node and connect them with the transactions and information. We do the mega graph and apply AI to search and match risky patterns from that graph. So through these capabilities, we have built our defense line for our financial service, as well as keep us a step ahead of the risk and the fraud. Security is not the only consideration if we want to build risk products. No, there are many more considerations. Referencing from an important and famous impossible triangle scheme from blockchain. As we know, blockchain always talk about decentralization, security, and performance. So I basically joined this graph, trying to mention about user onboarding and question whether we can achieve the balance here to considering user experience, financial gains, as well as risk tolerance. This notes represents interests of user, business, as well as regulator. Based on the results, I think the answer is yes. With the right technology in place, we can achieve a good balance. In our journey, we have basically allowed the user to finish user onboarding within 3 minutes of time. That's the user experience. Through our partners like GCash and TNGD, we have converted more than 100 million users over the past few years. I think I should increase this number because I just learned that GCash already have 66 million users today. Also, we automate 80% of transactions, means that 20% is marked as high risk for additional checks. So onboarding is just the first step. To make the vehicle run, we have to also consider how to span the technology across the entire user journey, from account opening to the account activities such as user login, as well to the transaction activities such as payments. Right, so basically what we have to do is that we have to organize these point solutions into a platform. According to a Ghana market guide, it was saying that the orchestration of these complementary activities requires a strategic consideration. The convergence trends of fraud prevention, identity proofing, as well as authentication this trend will need us to put technology in the right place at the right time. So therefore, I want to add one step further. So technology alone is not enough. We have to include technology with the process. So therefore, I think it's time for me to hand over to Hui Zi to talk about how the process is integrated with TNGD e-wallet. Thank you.
Hi. I always have a problem explaining my job scope to my grandparents. And one day I actually overheard my grandmother telling my relative about what I'm actually doing. She said my granddaughter actually keeps the company safe as Singapore. And I find it very candid because she added this information about Singapore being safe. And apparently it's actually true, a fact that Singapore is actually ranked the 4th safest country in the globe. So what I actually want to tell you guys about is, good afternoon, I'm Hui Zi, Chief Risk Officer of TNG Digital, Malaysia's leading e-wallet, and with the bold mission to bring Malaysian to the future, where cash is merely an option. Today, Touch and Go is actually 4 years old, and we are actually proud that 1 in 2 Malaysians are holding Touch and Go e-wallet today. Okay. I actually want to relate something that I actually do daily basis, which is related to fraud and security. And that brings me some stories that I would like to relate to you in a more layman's term. My dad is actually 70 years old. A few years back when Malaysia started with the e-wallet space, my dad actually registered with one e-wallet account as well. Not long later, I realized that he's not been using his e-wallet. And I was puzzled when he actually stated that he doesn't know how to use it and the system is not working. Well, in his terminology, the app is not working. And I was puzzled. I went and investigated, and after a while, I actually understand that he actually have early signs of dementia. And due to that correlation, he actually forget the PIN number that he actually set earlier when he onboarded as a user. And what we actually found is troubling, right? Because he actually wanted to use, but he can't remember the PIN. And he decided to not use the e-wallet because it adds stress to his work, pretty anxiety about it. Okay, so what happened then when I actually went and do a research? I found that under the Alzheimer's Disease Foundation, approximately 265,000 Malaysian population are actually living in dementia. And this number is actually already adds up to 11% of the population. And what more, they actually did a projection that this number will increase to 825,000 in year 2050, which is 312% increase from that number itself. That would mean if this group of people that we're going to onboard and we are actually slacking them aside, we actually ignored them. So this group of people will no longer be our user case. What more, you and I can relate that normal humans like us, healthy people, we also have a tendency to forget our PINs as well. And when I actually researched back under Hype research study, in 2019, 78% of people actually at least reset their password once in the past 90 days. If I actually use this percentage of 78% into our business world, which is my business world, which means 14 million of my population, my users, will actually have a problem. They will reset their PIN in every 90 days. And that's not what we want, because whenever we actually wait for the customer to reset their password, there's a chance that the customers will churn. So you can see that the pie is actually growing bigger. And because of security that we actually have improvised in the e-wallet itself, or any technology that we improvise with such security feature, we have forgotten about customer-centric. Okay. In the technology world, we must make sure that security feature is meant to actually verify the genuine user on transacting the transaction, or performing any transactions during each customer journey checkpoint. But if we put a security feature that is overloaded, that means we are actually creating a customer friction in the e-wallet space. And that's not the healthiest reaction that we want. We actually wanted a balancing act. So instead of protecting the customer, we are also pushing the customer away. So let's just see the digital world explosion that we're having now. A few years back, we only have a number of digital accounts. I think Facebook, emails, and some sort of social media that you have in hand, that you can easily remember the password. But as we grow and expand in the digital world now, we have Internet of Things, machines, robotic wearables, e-wallets, digital banking, which is blooming up in the market. We have all sorts of passwords that we need to remember. And this adds the stress and anxiety to customers. When technology actually creates stress and anxiety to customers, this, in a way, it actually have a setback to people and then undoes the gain that technology have to offer to the users itself. So what we actually did in Touch and Go e-wallet is that we need to embrace technology, but in the same way, we put customer-centric as upfront. What we did is, first, we onboard the customer using a tool that allows them to actually validate their face. When we actually do eKYC, we take down their information from their IDs, registered ID, and then we actually capture your beautiful face, your handsome face, your sexy face, or your cute face, or whatever face that you're thinking now into our system. And thereafter, all this database that we hold in the cloud, we make sure that this is secure, and we add on contextual data. So contextual data is the things that we collect from geolocation, MSISDN, network API data, device ID. And all this contextual data that we build in, we start to build risk models. We start to build machine learning, AI models, alongside to ensure that the person that is actually transacting or performing a change or password or whatsoever in the app itself is a legit customer, but it also allow me to actually have a behavioral analysis at the back of this system. One more is our eKYC profile that is safe. It actually is safe in the database. So whenever a customer actually make a payment or transact that requires you to have a biometric verification, it actually verify and match against the handsome face or pretty face that you saved before that, rather than matching against the phone photo that some of the apps actually have. This actually is a very different security basis that we're creating, because if you actually match against the photo on the phone, it can actually match against someone who actually have saved their phone, the profile into your phone, rather than a legit customer. So that's not what we want. So in Touch and Go eWallet, we have actually invested quite a lot of investment into our security and safety feature. The reason for it is because we need to sustain our security platform. We want to build trust and confidence to the users base. Initially, when we started our journey in March 2018, our user base is so small. We haven't got the users that we actually wanted. They do not know what is e-wallet about. They don't feel secure on using e-wallet. So what we did is, our mission is actually to roll out money-back guarantee, which is a space where we authorize any refunds to users who report in to say that they have any unauthorized transaction within our e-wallet itself. And in order to achieve that, we need to make sure that our security and fraud system is up to par, if not best of the best, to ensure that we actually do not lose a lot of money from there. Okay. So you can see that our e-wallet actually is a sole e-wallet for highway usage, and we are also have expanded to cross-border, where we are able to be used in Japan as well as in Singapore. If you can see in the airport, we are actually collaborating with Alipay, and Touch and Go can be used in quite a few numbers of areas now, inclusive of Comfort Go taxi as well. So this is the launch that we did for Money Back Guarantee. After we actually had beefed up our security platform, we are proud to launch the Money Back Guarantee in 2019, where there actually is also one of the prominent product that we actually launched a few years back. It has actually garnered quite a bit of attention from the users because we are the only sole e-wallet that have this feature itself. And when we actually have done all this confidential confidence, building of confidence level to the users base, what we did is during MCO, government also have a lot of subsidies that they actually want to boost up the morale of the citizens and the merchant space. What they did is in 2019, they created a subsidy scheme of E29 where they give out 30 ringgit to every citizen aged from 18 years old and above and income less than 100K a year and subsidize it through our e-wallet space. And it continues on with e-Penjana, which is launched in 2020, where they give out 150 ringgit each now to all citizens. And then e-Belia in 2021, where they give out to 30 ringgit to all 18 years old and above for income less than 100K. And after that, in year 2022, this year, we move on to 150 ringgit given to citizens at the age of 18 to 20 years old. So these are some of the schemes that government is very actively participative in, and they are very passionate of using e-wallet space because of the cashless environment. And one of the criteria that they set for the e-wallets that actually come into this space is that they must have a strong e-KYC platform and adhere to the fraud and security platform that they actually have governed. Hence, I would like to actually end my script here with why advice here is that do not be a slave to technology. Even if you are actually built in your technology in some processes that you have done it a few years back, but you shouldn't be constrained with what you have, but you should continuously improve and enhance the technology so that you actually can move your business to the next level. Thank you so much.
Thanks very much, and Zhang, for that presentation, which is dealing with the really challenging issue of how to manage risk while you're also, at the same time, trying to grow your business. For the last presentation today, I'd like to introduce John Ho from Standard Chartered, who's going to talk about continuing this challenge of legal and regulatory challenges and how the legal team, I guess, and the legal system is trying to support innovation at the same time.
Thanks, Brian. I think earlier you heard a lot about innovations and payments. We heard about security, and earlier we heard about from Sandeep about the sort of metaverse and the future of payments. I think just today on the topic of digital assets, I think in order to have a sustaining environment, you probably need clear regulatory framework, because without which it'll be very difficult to scale, and also in what we're experiencing now in crypto winter, there's a lot of sort of difficult challenges to navigate the market, to know what's real, what's legit, and what's not. What I'd like to do today is just cover the digital asset space. My name is John Ho. Currently, I'm the head of legal for Standard Chartered. I've covered the sort of globally. So now that travel is back, I've been to 7 countries in the last 5 months: Europe, Asia, Middle East, and shortly to the US. So why digital assets? As we talk about the future of payments, it's not just about using your credit cards. It's also looking at the different types of payments, as Jeff mentioned. You have stable coins, crypto assets, non-fungible tokens, decentralized finance, and then last but not least, central bank digital currencies. Central bank digital currency is one of the sort of hot topic among central banks right now. Among the global central banks, 2/3 of them are trialing, looking at proof of concepts to look at what a digital form of money, a fiat digital form of money will look like. This is against the backdrop of what we have seen earlier or discussed: declining use of cash, accelerated use of cashless, the digital payment post-pandemic, the evolving structures of payment service provider, in new forms of private money, as we talk about cryptocurrencies, stable coins, asset-backed tokens, and what have you. Just to set the stage, $133 billion is the annual cost of financial industry to spend on current legacy system to maintain post-trade securities in clearing settlement. And then you have crypto assets right now. It's $1 trillion. They've dropped from $3 trillion. It's high, but still a very sizable market cap. We have, in terms of the size of blockchain in 2026 in the usage of the market infrastructure, it's estimated by PwC to grow to $56 billion in 2026. And then in terms of the devices, blockchain devices, we're now at 2.46 billion in 2026. These are obviously huge numbers. Potential is there, and the growth trajectory is on the upside. Now, we can't talk about digital assets without looking at regulation, and this is where central banks, policymakers, and obviously regulated entities are very focused on, because until we tackle regulatory issues, as I mentioned, institute players, regulated players, and also sort of consumer protection, these are key concerns. The first part talks about compliance with rules and regulations. Digital assets is in the form of what we call tokens done cryptographically, but there are various types of crypto assets right now. There are more than 20,000 cryptocurrencies that exist around the world. Some of them have traits that are similar to securities, at the moment largely unregulated cross-border, and I think regulators around the globe are trying to bring that into play to ensure that if these tokens are securities, they need to be regulated within the same guardrails of a security. Similarly, we have tokens like stable coins that are more in the form of payments or payment-like when the new technology. And I think increasingly they are being looked at that the payment guardrails, payment infrastructure need to put in place. Second part is about KYC AML. KYC AML is key because, as we hear earlier in the earlier presentation, you need to make sure that you know your customer, anti-money laundering, financial crime protection is key. Without which, as you note with regulated entities, these days there are enforcement laws against AML breaches, not just result in reputational risks, financial risks, and loss of clients as well. Data protection, privacy, cybersecurity is key. There's been quite well-known hacks that's happening in the crypto exchange world, and one needs to bear in mind that the cybersecurity, the cyber resilience of the platform is key. Accounting and tax is also a key issue. In many countries, there is very little guidance in terms of accounting and tax. One of the things to bear in mind is what are the treatment of accounting and tax. We have financial reporting. If entities were to hold crypto assets, how do they report it in their financial statements? Last but not least, we also have reputational risks with respect to certain types of tokens and governance. As we note, with certain types of tokens that rely on proof of stake, sort of consensus, the sort of carbon footprint is high. And I think increasingly a lot of institutions are also looking at the types of blockchain technology they adopt, whether that aligns with their green strategy. Now, if we talk about regulation, this is a wide space. In terms of regulations, the areas of regulators they are focused on, a lot of them are looking at data protection and ensuring that where crypto assets behave and looks like securities, they look like payment infrastructures, they are also subject to the same activity, same risks, same regulations. At this point in time, a lot of regulations are still work in progress. In the US, there's a bipartisan bill from the Democrats and a Republican looking at a pan-federal legislative approach. This bill is still being tabled to be discussed. In the UK HMT, the FCA, and the Bank of England are obviously consulting to look at what a sort of a holistic framework for crypto assets will look like. In Europe, we have what we call Market in Crypto Assets Regulations, called MiCA, that for the first time provide a pan-European passporting approach with respect to crypto rules. The rules have been finalized at a political level, but the devil's in the details at this point in time. they will take about 18 months for the exact implementation rules to be implemented. So for MiCA rules for Europe, estimated to take effect in 2024. Closer to home, Singapore. Singapore has been in the limelight lately because this is where quite a number of crypto assets providers are based. You have the likes of Three Arrows Capital. You have the likes of Vault. You have the likes of quite a few of them that have suffered recently due to the downtrend in crypto assets. But as Ravi Menon, chair of the MAS, have said recently, one needs to draw a distinction between regulated and registered. Number of entities here that purports themselves, including Terra Luna Foundation, to be based here, are largely unregulated, but registered their domicile in Singapore, and therefore given this perception to people that they are somewhat connected or regulated, which they are not. So I think it's important to actually, when you deal with counterparties, to ensure that you're dealing with regulated entities, properly licensed, well capitalized, and in future, increasingly have the relevant license to operate with proper risk management approaches that the rules are forthcoming. Now, if you look at a regulatory approach, I've covered sort of key areas, US, UK, Europe. In China as well, China is building blocks on blockchain. Where the regulators are very focused on is to ensure that data security, data protections are protected. And China, as you note, have actually trialed the eCNY in a number of cities with, I would say, good success in the sense that they launched the eCNY during the Winter Olympics this year. And in a number of cities right now, the number of transactions in CNY has run into millions of dollars. And what they're trying to do now is not just look at it domestically, but creating a new financial system that relies on eCNY on a cross-border basis. So that is obviously a key focus as well. In Singapore, Ravi Menon has said that given recent crypto crashes and crypto winters, MAS is going to look in October, coming out with a framework, or rather with what a crypto regulation would look like that is sustainable, fostering innovation, but at the same time tackling the risks that crypto assets pose. Let's look at the key areas of regulatory focus. As I talk about, consumer protection is key. As we look at some of the harrowing stories with people losing their entire savings in the Terra Luna stablecoins and many other stablecoins that have crashed, there are no consumer protections. Because currently, largely, the number of sort of unbacked crypto assets are largely outside the regulatory domain. You also have the AML, CFT, and KYC. The number of hacks where people have lost billions of their wealth in sort of crypto wallets runs into billions of dollars if you look at recent analysis. Financial stability is a key concern among the policymakers, central banks, and international setting body. Key concern is that as crypto system gets more and more important in the ecosystem, when we talk about e-payments, e-wallets, and cross-border, the interconnectedness between traditional financial system and the sort of digital assets world will sort of converge. I think increasingly, regulators are now saying if you want to get into payment services, whether in the crypto space or traditional space, there got to be some basic norms of regulations. So as we speak now, the financial stability body, the Bank of International Settlement, and a number of central banks are going to come out with a regulatory framework to look at where stable coins are used for the purpose of payment, they will be subject to the same payment rules, payment framework that currently payment services are subject to. Cyber and tax, as I mentioned, already covers key. Securities and market integrity is also key towards building governance in this area. As we note with a lot of crypto assets these days, if you look at NFTs in Discord, quite a number of people are actually doing fundraising in the name of NFTs or ICOs. But if you look at that, the US has been, SEC has been quite vocal in that quite a number of the crypto tokens are actually dressed up in name as crypto assets, but in nature they are securities token or fundraising that are not registered, and to the extent that they are targeting US customers, those are in violation of US securities law. The area and regulatory space is here to stay. In fact, given recent downtrend, what we can say, and this is what's public in the G20 presidency that Indonesia is chairing in October, you will see the rollout of a global crypto assets framework where central banks will have to adopt or transpose to local regulations. CBDCs. We can't talk about digital assets without CBDCs. Globally, a number of central banks are looking at rolling out CBDCs. There are 4 live CBDCs that have been implemented so far, largely in small countries. But the most recent one in a trial fashion is China. CBDC in Europe, Digital Europe, is expected to be rolled out in 2026 after a 2-year trial. In the US, there were initial hesitancy about US dollars. But given recent remarks from Janet Yellen, Jerome Powell, it's increasingly clear that in order for US to preserve its place as a reserve currency, US dollar as a reserve currency, the notion of having a US dollars in digital form takes precedence right now. So this gives you a snapshot on a number of activities right now. 86% of all central banks are currently researching and experiencing CBDCs around the world. And a number of projects look at not just retail CBDCs, but also wholesale CBDCs in the form of international payment. So where are we in terms of takeaways here? When we looking at implementing digital assets in your ecosystem, whether as a service provider, whether as a client to a service provider, or whether as a technology provider, you've got to look at the regulatory framework. The regulatory framework, to the extent that you are part of the ecosystem, have different rules that would eventually apply, whether as a tech provider, whether as a bank, a credit provider, wallet provider. There are different sort of shades of regulations that would apply. Regulators now have a responsibility to protect consumers. As I mentioned, consumer protection is real. Financial stability remains a key concern. And where we are is to have responsible innovation, same risk, same regulatory outcome. And I think the key point is fostering innovation, but ensuring appropriate risk-based regulations. So I think it's key that when we look at crypto assets or digital assets, the key question to ask at the boardroom level and also for those who are implementation level, what rules apply? With that, thank you for listening to my presentation.
Thanks very much, John. Thanks, John. Super paper from John. The challenge of trying to frame in a short paper some of the regulatory challenges at the moment, that's a really difficult task, but he did that brilliantly. So I'm going to be joined by my colleagues on stage now for the last few minutes of the session. We need some extra chairs, so hopefully this will work. Just ignore the noises in the background. So I'd like to welcome all my speakers back on stage if I can, and Jeff also. And we're just going to review some of the points that came out in the papers, really. If there are any questions that you'd like to ask the audience, just raise your hands and shout. I'm sure we can get a mic to you. I'm sure the guys are happy to take some questions, but guys, just come and take a seat. So thanks for all your help in preparing for today and all the work that you've done in preparing the presentations. Jeff, can I start with you? So there's a huge amount of data in the slides, but at a very strategic level, what's the difference, for example, what's going on in APAC on payments and the rest of the world? What are the 2 key differences that you see?
Yeah, good question. So I think the 2 key trends that stand out about APAC relative to the rest of the world, and I hope this came through in the slides, are the prevalence of digital wallets and the emergence of super apps. And these, of course, are not mutually exclusive, right? There's a lot of overlap between the two, and a lot of what's driving one is driving the other. So I'll kind of speak about them in aggregate.
Yeah.
But there's a few reasons why I think they are more prevalent or kind of ahead of the curve in APAC relative to other regions. And to start, I think really it's kind of that first mover advantage, right? So you saw it first here in Asia.
Yeah.
And so the rest of the world is kind of looking and following what's going on here. So that's a big one. But I think part of it also is because there's a lot of brand power behind them, right? So you see some of the biggest brands in Asia, some of the biggest brands in the world for that matter, are the ones that are kind of leading the movement for super apps and digital wallets. And so there's some pre-established trust there. There's brand recognition. So I think that's a key factor. And then the final factor that I'd touch on maybe is the comfortability with sharing of data, right? I think that's another area where Asia has a little bit of an advantage relative to some other regions, North America, Europe, because these apps, they generate a lot of data, a lot of user data on your payments, on your preferences, consumer habits, and I think the Asian countries in particular, consumers are a little bit more comfortable with sharing of that data.
Okay.
So I think that's a key driver as well in the fact of the proliferation of digital apps and digital wallets.
Thank you. That's a great answer. Just one point, if I may. I probably need a quick answer on this, Jeff, but you also mentioned UX, the importance of user experience.
Yeah.
So what did you see? What does WorldPay see when it makes that kind of statement about the importance of UX?
Yeah. So I'll be brief with my answer on that, but the importance of UX can't be understated, and it's really where it was once a differentiator, it's now kind of table stakes, right? You need to have a good user experience, or otherwise you're going to lose your customers.
Yeah.
And when it comes to the payment space, it's really embedding the payments and embedding the finance into the app. So I'll take a quick example. Think about an Uber, right, or a ride-hailing app. And if you were to hail your ride, but every single time you did that, you had to enter your credit card number. Maybe it took you outside of the app into the PayPal app or Alipay or something. That's a bad user experience, and customers would be less inclined to use it or more inclined to use an alternative. So I think that really having that seamless, trustworthy user experience where a customer is willing and able to share their payment information within the app and to transact seamlessly, I think that's really the key element of user experience that is foundational at this point. Yeah,
super. Thank you. That was very insightful. So, if I can turn to you, if I can build on the point your grandma made. So you have responsibility for managing the risk in the business, and the UX really impacts that. So how do you grapple? How do you balance those two things on a daily basis? How do you set the risk appetite for the business? Given those challenges?
So in the e-wallet space is actually, there's a lot of KPIs that we set from a risk appetite perspective. Most importantly is we actually have a very close collaboration with our stakeholders to understand what type of KPIs during the year that they actually would like to take in, balancing with the financial aspect that we have in our pool. So every year we have that forecast being done upfront, and then once we actually set the KPI, then that's where the team starts rolling out their sleeves to make sure that they manage from the different aspect of fraud and security perspective, and work together with the tech team as well as the product designer to come up with user flow designs where we collect stories. We understand what is the modus operandi behind it from the fraud angle, but then we always try and error from the customer journey from the start when they onboard till the end to see which are the places that we can have checkpoints verification and reduce it with different type of models and make it better along the way. And then we also venture into different outsource vendor as well to see whether there are any better solutions in the market that we can actually integrate with our engine as well to improve our customer journey from the UX perspective. So that's the things that we keep doing every day on a daily basis. I really trust that my team is actually doing a very great job, because our fraud ratio to date is actually less than, I think every year it has actually reduced in significantly. Despite starting with 0.00x%, now it's becoming 0.0000x%. So every year we have a very high target set for fraud.
But I guess the point was you do that, you could do that by declining 99% of the people, and that wouldn't be a good thing for the brand. So how do you balance that with
Yes.
the other part of the business, if you like?
So the fraud ratio is the one that I mentioned earlier.
Yeah.
Then we have another target for customer experience ratio,
okay.
where we cannot reject a certain amount and a certain percentage that we need to keep upheld with.
Yeah.
So usually it will be 99% of uphold time or more than that.
Okay.
Yeah.
That's really helpful, thank you. And Zhang, from your perspective then, because obviously we mentioned that she was working with vendors and partners, so this is where you come in. So how do you go about either finding new data points or developing new solutions that can dial up or dial down the acceptance rate, for example, in line with risk appetite? How do you do that?
Yeah, I think algorithm accuracy is certainly important. There's two ways to improve that. One of them is to enlarge your training data. The more data you have on hand, the more accurate the algorithm could be. Second option is that you innovate on the algorithm itself, making more better structure, and then improve it. But this one will be very difficult. So how we got the data? For Alipay, it's relatively easy because we have belongs to Alibaba. So we have internally we already have certain payment history information.
Yeah.
And then when we want to acquire external data, then we always have to think whether we can do it completely, which means that whether we can acquire data in a so-called legitimate way. So what we can do is that we can make use of our technology. There's this privacy data protection or privacy preservation computation technology, whereas both party have data and they want to co-train algorithm, but they don't want the counterpart to know their secrets. So we can do that. We can identify the overlap of users. If we think that the overlap is huge enough, then we can enter such collaboration. For example, in case in Alipay Malaysia, just an example, and if we want to collaborate with TNGD, if we think our user has overlap enough, what we could do is that we can leverage on this training algorithm.
Okay.
And then we both share the data to fine-tune a better algorithm and solution to provide better accuracy. However, we don't have to exchange data. So that's how we do that.
Is it about finding a brand new data point that we didn't have before and we found it and it works, or is it more around making more sense of what already exists?
So we have our information like payment transaction history. Of course, we use alternative data like device, what you mentioned.
Yeah.
And then from touch and go perspective, they also have their user payment transaction histories. And those two data, if you merge together, that will give you more precise prediction on the risk, credit, or even promotion.
Yeah.
So that's the way how we do that, multi-party computation.
Fantastic, thank you. Thanks, Zhang. John, if I can come to you then. So in layman's terms then, where are we in APAC now on policy and regulation on digital assets? How would you describe generally from APAC? Where are we? Very early stages? Is it supportive? I know that's what you said you'd like to achieve, but is it actually there or?
Yeah, I think the way to look at digital assets is not just looking at the tokens alone. There are actually three components to it. First is the technology, the blockchain technology, or what we call the distributed ledger technology. I think where we are, I can see some of the use cases here in a lot of presentations earlier, is the technology has a transformational effect you could see in GCash and kind of stuff, and sort of enabling financial inclusion. The technology part of it is where a number of policymakers and governments here will want to encourage. Because as I mentioned, there's a chance if properly designed, it has all the benefits of reducing costs of cross-border payments at scale, financial inclusion, as I mentioned, and also enabling empowerment when we look at the new sort of economies as we talk about the potential metaverse world. The second part talks about tokenization. If you look at earlier, the potential now to own assets that what is essentially out of reach from a lot of mom and pop. For example, digital art that it costs a lot of, real estate, and any sort of asset of value, you can basically tokenize, fractionalize, creating secondary market. That is compelling. That part is something that, if you look at the number of jobs being created, potential is there. I just came back from Dubai last week, where the UAE government have announced a master plan to create a metaverse economy, creating potentially 40,000 jobs in the next 5 years.
Right.
From artists to tax providers to administrators. That's huge.
Yeah.
The last part is on this, obviously, the digital asset tokens itself. Now, where they're looking at payments, and it becomes of a systemic token, for example, the likes of Libra, had it been scaled, that is where the regulators want to make sure that if you are providing a service of a large magnitude, that if you don't get it right, you impact quite a lot of people. That's where the risks and regulations are being focused on.
Right.
So let's not forget, when we look at digital assets, there's a technology piece, there's a tokenization piece, and there's a regulation piece to make sure that safety and soundness, market integrity, and also, as we talk about, the policymaker ensure that the financial system is safe and sound.
Yeah.
So as we see right now, we have crypto winter. But largely, the financial system are unscathed because largely a lot of these impact is still in sort of the unregulated world.
Yes.
But what this lessons learned is that you can't convert financial risk into something else overnight. So if it's risky, regardless of what form it takes, the risk still lies. So I think in the other thing that lessons learned is that when we look at the types of activities that one undertake, it's not about the technology. If you are doing a regulated activity, for example, securities offering, the regulators now are getting a bit more savvy. They focus on regulating activity rather than the technology itself.
Yeah. Thanks, John.
Yep.
And Jeff, just continuing this point of kind of digital assets or digital currencies, is digital currency starting to show now on payments, and what's the trend line?
Yeah. So building upon what John said, I do think digital payments, crypto payments, digital currency payments, they're coming. They're starting to come. They're starting to emerge. Crypto is too big to ignore, right? I think there's estimated over 300 million crypto users at this point.
Right.
And to this point, it's largely been an investment vehicle, right? But so many people have cryptocurrency now, and they want to do something with it. They want to spend it, right? So it's just starting to come. The problem is there's not that many merchants that accept crypto. So we're in the process. We're actually a little bit ahead of the curve in helping enable merchants receive crypto payments and transact in crypto. And there's a lot of benefits to that. I think John highlighted some of those. And so crypto payment is definitely coming. I do want to underscore as well, the emerging relevance of digital currencies, right? So while crypto payment is coming, I think there's a really strong push for acceptance and development of digital currencies as well, and specifically within APAC, right? I think John highlighted on his slide, and I think that what was highlighted there is only continuing to grow. That most markets in the world, I think it's upwards of 150 governments at this point, are actually looking into digital currencies, and specifically within Asia, a majority of them are either piloting or in development already. So it is something that's coming soon. Governments don't want to, they want to keep their hand in the cookie jar in that regard. Digital currencies, I think, is something that's definitely going to be on the horizon in the next couple of years.
Super, thanks, Jeff. So I'm conscious of time, and I tried to finish the other kind of fireside chats asking my guests to kind of like project forward in a year or two's time. So I'd like to finish off with that kind of question if I can. So let's say we were sitting here in 5 years' time, and I said, just highlight what you think a key trend would be at the time. What would you think? Let's see. Sang, are you okay to go first? It's 5 years hence. and we're reflecting on trends in fintech, what do you think you'd be saying at the time?
Well, from my perspective, I think trust is still important no matter when.
Yeah.
But I see the trend of ultimate trust is coming. In the past, normally trust is get from a credit card, physical card, and then through verified identity.
Yeah.
Later on, as we see the blockchain, that's the foundation of trust that building the Metaverse. And also smart contract, that's the ultimate way that you can create trust, decentralized structure, consensus. We don't basically, you can trust it because it's decentralized. So it's the ultimate trust, I think, is a trend. In future, maybe the trust could even get from the soul bond token, which is a new concept. You basically create your history on chain, and then that could be used as a proof of trust.
Yeah, thanks, Zhang. And from a perspective of a CRO, when you have to deal with countless risks, what would you think would be keeping you awake at night in 5 years' time?
Yeah, I think because we are, like I mentioned about our bold mission to make Malaysia moving with the cashless society.
Yes.
Definitely one day we won't see much of a cash moving around, as we are also pushing for digital banking in Malaysia as well. Alongside, I see Singapore is also pushing for that. With all these booming up trends that is booming up now, I can see that online fraud, cybersecurity is something that it will be a day in, day out thing that our team will be very restless. But we also will forecast that with all this coming up, we also see that people should be to be more aware and they actually know how to manage this moving forward with the boom that is coming up now for fintech, digital banking, and all this cashless society that is going to happen soon after. That's where I think we need to put a lot of emphasis on cybersecurity aspect, and the vendors that is coming up with all these technologies will start to surface up as well. Yeah.
Thanks, Wei. We'll just keep going down the line. Jeff, from your perspective?
Yeah, so I'll touch on two things quickly, and they're both related, but I think it's the prevalence of more payment options kind of at both ends of the value chain. So, in the upper bounds, what we've talked about a little bit is the acceptance of crypto payments, digital currencies, et cetera.
Yeah.
Right? That's something that's really being driven and enabled by connectivity and the telco industry. But another key trend at the other end of the spectrum is connecting with and reaching the unbanked or the underbanked via direct carrier billing.
Yeah.
So that's just more options to a traditionally underserved population that only had very few, if any, options for payments. So I think just in summary, the abundance and proliferation of new payment methods.
Super, thanks, Jeff. And John, from your perspective?
I think where I see the sort of landscape in 5 years' time is as Jeff mentioned, the proliferation of digital payments is here to stay. We probably will see in the next 5 years the launch of a central bank digital currency is one of the major currencies, either in China or in Europe, because they've given a hard timeline, an estimated timeline for a wider adoption. I think there are two themes to bear in mind here. One is responsible innovation. You can't now create a technology and say run with it. I think increasingly the regulators are going to insist on developers, sponsors, people that enable the ecosystem to make sure that when you enable certain types of activities that are largely financial services or payment-like, there will be some form of regulations that are going to come their way in some form or fashion. I think that's key. I think the Wild West that we see in a lot of crypto days, I think will be curtailed with increasing regulations, but in the long run, it provides for a stronger foundation for a more sustainable growth in this ecosystem.
Super, John, thank you. So I'd like to thank my colleagues for their time today and the preparation work they did. So if you could give them a round of applause, please. Thank you. And just in closing, couple of slides. I think I've missed one there. So the question was a segue to this answer, really. While we're here today, We started off our journey on fintech, and the GSMA really is a mirror. We're a mirror to what our members do. I don't write the content, I don't drive the products, my colleagues and members do. So we started in Barcelona, it worked really well, which is why we're here today. We are supporting our North America conference in Las Vegas. Similarly, we're going to Africa in October. Automatically now, we're already planning for Barcelona next year, and I guarantee it'll be packed. Fintech will be one of the main themes in Barcelona. So that's kind of why we did what we did today and where we're going next with it. We also have our own kind of Fintech Forum where we showcase the brilliant work of our partners. This is a digital forum. The next meeting's on November the 17th, and you can see the kind of scope of the things that we do. So Fintech's really active at the GSMA. It's really reflective of our members. I framed it for the 20%. But if that's your area, do reach out to me if you'd like to get engaged. And thank you very much for your time today. I really appreciate it. Thank you all. Cheers. Thank you.